This is the price of Palantir stock as of December 14th, 2023. Over the past year, Palantir stock has surged impressively, soaring by a staggering 200%, climbing from $7 in January to around $18 today. However, amid this financial ascent, analysts hold conflicting opinions, raising questions about the sustainability of this growth. The central question we aim to answer is Palantir stock truly worth the current hype, or are we on the brink of a potential nosedive?
Tracking shares of PLTR as strong demand for its AI platform is giving Palantir a boost on the day. The company's stock and company saw revenue jump 17% in the third quarter, boosted its outlook for the fourth quarter, now expecting revenue of $599 million to $603 million. Shares ripping to the upside right now by about 19% here on the day, but it's important to remember in context over the course of the year.
They're doing really well. It's up 177% for the year. I mean, that's if you got in on that at the beginning of this year, you're sitting pretty in terms of shares of Palantir. So clearly investors liking both how they performed and their guidance. They talked about this strong interest in AI boot camps. That was something that they talked about in shortening the amount of time of revving up training there, shortening it to days of training within AI because there's so much demand for this new frontier when it comes to this AI stories.
One of Palantir's flags is its success with its commercial version, Foundry. Foundry has proven its efficacy in diverse applications, notably in hospital scheduling. The software's ability to match available resources with the required needs has garnered attention and success in various planning scenarios. This application extends beyond the flashy world of high-tech visuals, demonstrating practical and crucial use. Palantir's success is further underscored by strategic partnerships and contracts shaping its trajectory. Notably, BlackRock's substantial investment of $1.5 billion signals a strong vote of confidence in Palantir's potential. This financial backing indicates investor interest, recognizing Palantir as more than just a speculative venture but an AI-driven enterprise software company with tangible value and applications. Investors are drawn to Palantir's technology, viewing it as a key player in the AI space. The $1.5 billion stake from BlackRock injects capital and reinforces the belief that Palantir's Foundry and its applications, such as hospital scheduling, have real-world practical significance. But despite Palantir's surge in popularity, a critical lens on its financials raises eyebrows. The company's market capitalization, standing tall at over $40 billion, appears disproportionate when compared to its revenue, a more modest $2.1 billion. This stark contrast invites skepticism and further explores Palantir's valuation. The skepticism revolves around whether Palantir's current market cap is justified, given its revenue figures. A market cap of $40 billion implies high investor expectations and confidence in the company's future growth potential. However, the skepticism arises from the apparent disconnect between this optimistic valuation and the current financial reality. The market cap reflects the collective perception of a company's worth, encompassing anticipated future earnings, growth prospects, and overall market confidence. In Palantir's case, the valuation seems to reflect a future where the company's revenue and profitability will significantly outpace its current standing. A valuation that outstrips a company's current performance may indicate high expectations and lead to increased stock volatility. Now, if we take a look at Palantir's trajectory, government contracts emerge as a pivotal element shaping the company's path. The significance of these contracts is underscored by the sheer volume, with government contracts accounting for a substantial 55% of Palantir's total sales in Q3. The $458 million deal with the U.S. Army is a particular contract that draws attention. While such contracts are substantial revenue streams, they pose challenges, especially during renewal. Analysts scrutinize this contract closely, expressing concerns about potential challenges accompanying the renewal process. The renewal's significance lies in the monetary value and its implications for Palantir's future revenue stream and overall market standing. One of the prominent concerns raised by analysts revolves around data ownership conflicts. Given Palantir's history as a military contractor, data access and ownership issues have surfaced. The U.S. Army deal raises questions about Palantir's ability to navigate potential data ownership conflicts. These concerns have real-world consequences, as seen in the market's reaction to analyst notes cautioning against possible challenges in renewing the contract. What we see is a battlefield in the AI-driven enterprise software market, characterized by fierce competition and ever-evolving dynamics. Palantir now contends with the emergence of generative AI and an uptick in competitors. The landscape is evolving, and generative AI, a rising force, is changing the game. Companies across the tech spectrum are entering the fray, recognizing the profitability of delivering diverse outputs from vast databases. This shift introduces a new dimension to the competition, challenging Palantir's traditional approach. Increased competition in the AI space means that Palantir faces contenders without the military history that has defined its identity. These competitors bring different perspectives, lacking Palantir's proprietary attitude and military secrecy. And as they enter the market, they pose a threat in terms of technology and a more open and collaborative approach to data. Palantir's past success in military applications has set it apart, but in this evolving landscape, competitors are leveraging generative AI and other technologies to carve their space. But before we continue, we really want to thank you for watching this far. Moreover, there has been a lot of chatter among financial analysts, and the spectrum of opinions on Palantir's stock ranges from strong buy to strong sell, leaving investors uncertain. Analysts advocate for strong buy rating on one end of the spectrum. These proponents emphasized Palantir's rapid revenue growth, with a 17% year-over-year increase to approximately $558 million in Q3 2023. The bullish perspective is grounded in the company's ability to surpass consensus estimates for revenue and adjusted earnings per share, indicating a robust financial performance. Contrastingly, some analysts are more cautious, suggesting a strong sell rating. This camp often raises concerns about Palantir's high valuation relative to its current financials. The market capitalization, exceeding $40 billion, has led some analysts to question whether the stock is overvalued, considering the company's marginally profitable status. The reasons behind these varying recommendations underscore the nuanced nature of stock analysis. Bulls highlight Palantir's revenue growth, strategic contracts, and partnerships, projecting a promising future. On the other hand, bears draw attention to the potential risks associated with the company's valuation, emphasizing the need for cautious investor sentiment. Investors must recognize the importance of considering diverse perspectives. The stock market is inherently dynamic, and varying opinions provide a comprehensive view of the risks and opportunities associated with a particular investment. While some analysts see Palantir as a promising growth stock, others raise valid concerns about its current valuation and profitability.
What would it take to get there from here to 4 billion? They have to grow at 30% plus. Right now they're growing at 13 to 15%. How do they grow at 30% plus over the next 2 years when the IT environment is getting tougher?
So, entering the heart of the analysis, the bullish argument for Palantir centers on its commendable revenue growth. Proponents of this bullish perspective highlight these figures as a testament to Palantir's ability to deliver tangible financial results, outpacing consensus estimates. However, amidst the optimism, there's a note of caution. The high valuation of Palantir stock raises concerns among analysts. Some see this significant market capitalization as being out of sync with the company's current profit margins. The caution stems from the delicate balance investors must strike between anticipating future growth and the current realities of Palantir's marginally profitable status. While revenue growth provides a strong foundation, challenges in government contracts pose a potential hurdle. The renewal of the $458 million U.S. Army contract is critical, and analysts are urging investor awareness. Issues such as data ownership conflicts could impact the contract's renewal, highlighting the importance of a cautious approach. So now, do you think Palantir can sustain its growth trajectory, overcome potential challenges, and justify its current valuation? Share your perspective in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know about Palantir's future valuation. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.